easier, it's no problem. No problem for me to do that.
Okay. All right. So you just load them up. Yeah. So who's that speaking, by the way?
Oh, that was Barish.
Okay. So he's here. He could come, and Khurshid Bey is also here. Okay. It was the link did not change, Mike.
No, link hasn't changed.
So it didn't change, because somehow it was difficult to enter. Then I used the Eventbrite's direct link, and then that link I could come now, but somehow it was difficult to enter.
Okay, well, hopefully it's okay, because we're all using the same link. And but I just wanted to get back to Barish's point. So Khurshid, so Barish has got a presentation, so he'll be able to load it when it's his turn to speak. Khurshid?
Sorry.
So we've got our speakers will want to load their presentations.
Yeah.
And so no problem. We'll.
Okay, I will let them to share their screens.
Okay, thank you.
So Mike, you will be the moderator, and you will moderate the whole program. And in the end, we will have question and answers part again as usual, and we will again do like the same things. We will take the oral questions, direct questions, or the chat will be also available.
So what we're asking people to do is to send their written questions. And yes, hello.
Hi, I'm sorry to interrupt.
I can't hear you. You're muted.
I wanted to, and didn't want to interrupt. I wanted to just check the audio, make sure that it's working.
Okay. Yeah.
You can hear me?
Yeah, hear you fine.
Thank you very much.
Yeah, so Elif, it's going to be the same, except we're asking for written questions instead of verbal, and people can just use the chat feature. And and we'll hopefully finish on time the way you did.
Yeah, I'm sure that you will make it perfect.
Yeah, I see Yilmaz Bey.
Hello.
Good morning. Good to see you. Now you're muted. I can't hear you for some reason.
Okay.
Yeah.
Good morning to you.
Yeah. Wait a little bit. The numbers are going up quickly, but it's not even 10 o'clock. We're already at 25 on the call. So we expect a good number on this call.
Yes, it was very much like 120, something like that.
Over 130 now.
No.
You've done a great job. Can't thank you enough.
Yeah.
But I was very happy about that.
I tried to call and remind them all the time. Maybe it was a little bit irritating them, but
yeah.
But I wanted to have a big number of participants.
Yeah, well, we're certainly headed that way. So we're up around 25 right now, and it's growing quickly. Not even 10. But Caldwell, we see Caldwell is there, but they're muted. But it was.
Good morning.
Yeah, that's better, Brendan. Yeah, good. Good to see you.
Wonderful to be here. Thank you for hosting this, and I look forward to what I'm going to say in the 45 minutes you allocated to me.
Not for brief words from Caldwell. I had to say, we've got a lot of our registration people on the call, so it's not a closed call. But well, Jeffrey Steiner's on the call. He'd understand this, but it was so nice on that dry run that we had. It's such a collegial group of speakers. You guys get along so well, or at least put on a good act. And, it was just
can't
wonderful.
Stand Richard. I don't.
It was just fun. So, no. So for anyone that's just getting on the call now, we're just approaching 10 o'clock, the start time. And registrations people are just signing in. We have a large number of registrations for the call. So,
Jeff, is that you, the hat on?
I'm incognito in Vienna.
I didn't recognize you at all. The sunglasses too.
So it worked.
We're glad to have you.
Yeah, we're delighted to have you, Jeffrey Steiner, angel investor, and entertainment.
Click on the delete icon and confirm it with your token. That's it. For more help, use the walk me through function.
Mike, I'm off to Istanbul on Saturday.
Oh, you are lucky. You are lucky. And for business, I take it?
Mostly business, a little bit of leisure, and maybe some of those Simit bagels.
Yes, Simit bagels. Yes, absolutely. Absolutely. Those are fabulous. Miss those. I think there's an organization in Toronto that sells them. So, Morning, Richard.
Good morning, everybody.
Yeah, we're just waiting now. It's just turned 10 o'clock and we're approaching 50 people call. We have well over 100 registers, so we'll give them a chance to sign in. A couple more minutes.
We can wait a few minutes because still someone's coming.
Yes, okay, thanks, Richard.
Yep.
I think most of our speakers are on. Yeah, I'm going to give it about 3 more minutes. Wait till 10:05 and then we'll start then, if that's okay with everyone. Mehmet Ekazolo, good to see you. Yeah. Chris Gifford, good to see you too. Yeah, hi Chris. Yeah.
Hi, how are you?
We're doing well.
Merhaba, Victoria, British Columbia'dan.
God's country.
Her şey çok güzel burada.
And Mike Brent is with us now.
Okay, good. Yeah.
In 2 minutes, we can start if you want. So when they are coming, I will take them in.
Thank you very much. Okay, Resmi, we'll do that.
Yeah. Okay, Mike, if you want, we can move on. So
yeah, start now. Thanks very much.
Yeah.
Well, hello, everyone. Marhaba. My name is Mike Ward, and on behalf of the Canada-Turkey Business Council and the Turkish Capital Markets Association, I'm delighted to welcome you all to a webinar that will highlight the many advantages and opportunities of investing in Canadian capital markets. We have a terrific lineup of speakers from the industry who will provide you with a very solid overview of how Turkish firms and organizations can grow businesses using Canadian financial infrastructure. Unfortunately, we will be missing one speaker today. I'd like to convey Canadian Ambassador Khokhar's sincere regrets for not being able to join us due to an unavoidable last-minute commitment. We're certainly excited about today's event. This is the first time we have ever focused on Canadian capital markets. Clearly, it was a good decision to do that. We are extremely impressed with the level of interest the event has generated. As most of you will know, we co-hosted a Turkish capital markets webinar about a month ago with the Turkish Capital Markets Association that also attracted significant private sector interest. So we know we are onto something good, something that will be repeated in various formats and that will serve to promote more bilateral activity in each other's capital markets moving forward. We all know Canada's strengths in this area and why Turks should be incorporating Canadian capital markets in their business strategies. So just in case a reminder is needed, here's a short list of items identifying why Canada can boast about its strong market fundamentals. First off, Canada ranks first in the world in terms of macroeconomic stability. We have the most stable banking system in the G7. We are home to North America's second largest financial hub. Canada has one of the most favorable tax systems for new business investments in the G7. It is the easiest place to start a new business in the G20. Canada has preferential market access through 14 trade agreements to 51 countries with nearly 1.5 billion consumers and a combined GDP of around 50 trillion US dollars. Canadian FDI reached an all-time high in 2019. We have the most educated talent pool in both the G7 and in the entire 36-country OECD. And we are home to a growing and diverse ecosystem of innovators and entrepreneurs. I ask you, call me biased, but could there be a better place to do business? A couple of administrative issues before I call on our first speaker. First, I'd like to point out that full bios for our speakers are included on the registration page. So we'll not be repeating all that impressive detail when we introduce our speakers today. Second, This is to ask non-speakers to kindly mute their microphones and if they wish, turn off their cameras. Third, we will be taking written questions for the Q&A session following presentations by our speakers. Please feel free to send your written questions at any time via the Zoom chat feature. Fourth, the webinar is being recorded. And finally, we have framed this event as an overview of the Canadian capital market landscape. As I implied a moment ago, we see future events that will drill down in various key areas. But today, we are focused on the broad view. So without further ado, I would now like to call on Yılmaz, CEO of Yapı Credit Investment, to make opening remarks. Yılmaz Bey is also a member of the Turkish Capital Markets Association Board of Auditors. Yılmaz Bey, over to you.
Thank you very much. Dear honorable speakers, distinguished participants, ladies and gentlemen, on behalf of the Turkish Capital Markets Association, I would like to warmly welcome you to all our second event of this series on the capital markets opportunities. This event is co-organized with the Canada-Turkey Business Council. Today, we will have a closer look at the opportunities provided by the Canadian capital markets for the capital markets professionals and institutional investors from Turkey. I hope that we will be able to have more events like this to promote and enhance the Turkish-Canadian trade, as well as the investment and business relations in the near future. I would like to first take this opportunity to extend my thanks to His Excellency, Mr. Kerim Uras, the Ambassador of Turkey to Canada, and to Mr. Mehmet Ekizoğlu, the Commercial Council of Turkey in Toronto, for their kind initiative regarding the organization of these events, and to Mr. Badar Shamim and the Board of Directors of the Canadian Turkish Business Council, and to you, Mr. Mike Ward, as the Director of the Canadian Turkish Business Council, for your support and collaboration in organizing this event. As we are proud to have organized this event together with our Canadian friends, please allow me to use this opportunity to briefly introduce the Capital Markets Association of Turkey. As a public professional organization regulated under the Capital Markets Law, our association represents about 215 capital markets institutions consisting of securities firms, banks, investment trusts, and asset management companies. Our association, which celebrates its 20th anniversary this year, has the objective to contribute to the development of capital markets activities of our members and takes on an active role in the capital markets ecosystem. Within this objective, we establish professional rules and regulations, organize congresses and training events, conduct research activities, and cooperate with domestic and foreign institutions and organizations such as our Canadian counterparts and friends. Canada and Turkey, both being G20 members, are founded on and are sharing common economic principles and values of a free competitive market economy, sustainable development, and investor-friendly free markets. In 2019, the two countries signed a memorandum of understanding establishing a joint economic and trade committee with the aim of strengthening and expanding bilateral trade and investment opportunities. As Canada ranks the first in terms of in the world in terms of macroeconomic stability, with the most stable banking system and one of the most favorable tax systems for the new business development, I'm convinced that it will be very interesting and exciting for the Turkish investors to listen to today's distinguished speakers about the Canadian markets in every aspect. On behalf of Turkish Capital Markets Association, I hope that our Turkish participants will find today's event useful and will encourage them to explore many benefits and potentials of the Canadian capital markets. Thank you very much.
Well, thank you so much, Yılmaz Bey. It's been such a great experience working with you and your colleagues at the Turkish Capital Markets Association, and I'm glad you recognized Mehmet Ekizoğlu and His Excellency the Ambassador, because it's because of their efforts that we were introduced to you. And now I guess we're going to move on to set the stage for the rest of the program. I'm delighted to ask Brendan Caldwell CEO of Caldwell Securities, to provide an overview of the Canadian brokerage sector. Brendan, over to you.
Thank you very much. I appreciate being here. I very much look forward to finding out what I'm going to say. But I was listening to what the speakers were saying about stability. Stability kept coming up. And I want to talk a little bit about capital markets in general, why we're so enthusiastic about them, and why I think capital markets are absolutely critical, not just to economic stability, but national stability. In a phrase, they are the best way that the world has ever come up with for developing a middle class, because everybody gets to participate in the best ideas that a nation comes up with. Everybody has a stake in the wealth and prosperity of the nation if they can participate in the capital markets, if they can buy into the best ideas. But let me start with a bit of a story. Years ago, before he passed away of natural causes, the richest man in Canada was, as far as you could be with a 50-some-odd year age gap, something of a friend of mine. He was a lovely man, Lord Thompson of Fleet, Ken Thompson. He was in his 80s when I was driving down this dark stretch of road between a set of railway tracks and some garages. No streetlights, no nothing, and he was guarded very closely by two King Charles Spaniels, which, if you don't know what they are, but they're little lap dogs. So there was the 80-something-year-old Lord Thompson, who at the time was worth, I believe, $25 billion, which was a lot of money in those days. And I pulled up to him and said, "Oh, Lord Thompson, so good to see you." "Good to see you too, sir. May I ask you a favor?" What is that?" "Could you just walk somewhere where there's lights?" I'm not saying that I was tempted to throw the man with $25 billion in the trunk. I'm not saying that I was. I'm not saying the only reason I didn't is I knew his family wouldn't pay because they're so notoriously parsimonious. But what I love about Canada, and this guy was famous. He would take the subway with his little sandwich bag to work. He was worth $25 billion. What I love about Canada is an 80-something-year-old man can walk down a dark street at night with nothing, not having to put up with any threats except from smart-ass comments from young men. That's it. So that's the kind of country that Canada is, where you can just, wherever much you have, wherever famous you might be, you can walk down the street and no one's going to bug you. We don't live behind barbed wire. We don't live behind walls. We don't have gated communities. And there's a lot of reasons for that, cultural and national and political and religious. But I think that capital markets make a big, big, big difference. But let me talk about some contrasts. If we're famous for anything, it's buying into the stock and securities markets of exchanges around the world. We've helped them go from old boys clubs, country clubs, to public companies. From the New York Stock Exchange, where we're one of the largest owners of that, to the Chicago Board Options Exchange, where we're the largest owner of that, to the Toronto Stock Exchange, the Winnipeg Grain Exchange, the Philadelphia, Hungary, the Bombay Stock Exchange. We spent 10 years getting Bombay to become a public company. And why does this matter? Why is turning an old boys club into a public company so important? Because exchanges are, as I alluded to earlier, the place where all the best ideas eventually go. The question is, and we're going to come to this, and Richard Carlton's going to talk a little bit about this, at what stage and who gets to benefit from those best ideas coming there. But eventually, all the best ideas are or should be listed on a national stock exchange. And if you look at the countries with the greatest national stability, and at least according to our speakers earlier, Canada is chief among them, these are countries where, just as I don't like the term rule of thumb, but as a rule of thumb, if your capital markets, if the market capitalization of domestic companies listed on your exchange is greater than your GDP, if the domestic market cap is greater than the GDP, then you have a functional stock market, a functional securities market. The best ideas are making it onto the stock exchange. And if you look at some places like In contrast, I should say, if you're looking at some places like lovely places, some of them like Bermuda or Mexico, where you don't have a functional market, where the GDP of domestic companies, GDP is much greater. You have a situation like the 40 thieves in Bermuda, the 100 families in Mexico, or even the east coast of Canada, which is a country all to itself, where literally 2 families control everything. If you want broader participation in economic growth, then stock exchanges are the way to go. If you see having tight family control as not a bug, but a feature, well, that's a different conversation for a different time. But countries that have not a functional securities exchange do have all the wealth controlled in a very small number of hands. And if stability is the key, it was the theme from the earlier speakers, if stability is the key, you don't want wealth controlled in a small group of people. Sure, it'd be great to be worth $25 billion like Lord Thompson. But what's the point if you can't walk your little dogs down the street at night because you feel like it? If you don't have the freedom to roam around your country, what's the point of being the richest person in it? So if you're aiming for social stability, allowing everybody, either directly through owning stocks or through mutual funds, to participate in Thompson's company, which you've probably figured it out by now is Thomson Reuters. They were the biggest publishing company in the world, and now they're one of the biggest providers of electronic information. But whether you're Jeff Bezos or Bill Gates, or Zuckerberg, or any of these moguls in the United States, you have a certain degree of protection in that anybody and everybody, whether they have a mutual fund or a stock, has the ability to buy into your dream and to make it a part of the national dream. So where countries have that kind of participation, they're cheering for their wealthy. They're not resenting him, at least not nearly to the same extent. Again, a Canadian example. When we had the financial crisis, different than all the other countries on earth, the Canadian government didn't bail out our financial institutions. Now, in part, our financial institutions didn't have the same issues, and also in part, our government was prorogued. They were actually on a break, so mercifully, they didn't do anything. But they didn't bail out our financial institutions. You know who bailed out our financial institutions in 2008? The people of Canada. In Canada, rather than having a government bailout, the banks and insurance companies and other financial institutions issued stock. They issued common shares, they issued preferred shares, and people bought these by the tens of billions, backstopping our financial institutions. And that's why I think that when the Occupy movement happened in the wake of the financial crisis in the United States, it was a more violent affair. People felt that money was being taken from Main Street and being given to Wall Street. That's not what happened in Canada. It was take your grade 9 work during the Occupy movement in Toronto. And we took the grade 9s that we had over to the tent city that had been set up. And everybody was so polite and Canadian and collegial. And I was dressed like this. So look, I don't know the full answer to having national stability or having the ability to really enjoy one's country. But having looked at stock exchanges from Budapest to Bombay to Brazil, I can see that where you have countries with a strong capital market, where you have the ability to participate in that market as a regular person, as a regular citizen, where the best ideas flow through to that capital market, there are the countries that have the national stability. So the last stock exchange investment we made an investment in, and I'm going to have a little bit of a setup here, is the Canadian Securities Exchange. We've termed it the Exchange for Entrepreneurs, and from a standing start 17 years ago, it's become the fastest growing stock exchange, not just in Canada, but the whole world, listing companies at a much earlier stage than most other countries have. And I think this is important. I want to say one last thing before I turn it over to Richard or our next speaker. Venture capital is fine as far as it goes. It allows, though, the wealthy to participate in the best ideas, and then the stock market is used as a place to put those best ideas once the first billion or first 10 billion or 100 billion has already been made. It is much better for an economy, for a capital market, and for a nation to be able to have its people participate earlier in those great ideas. That's why a junior market, a venture market, a market that encourages entrepreneurs to list early is so critical. Because if stock markets are only the place where the $100 billion companies go and all the venture capital money and all the private equity money gets their money out before the public gets to participate, that is not a sustainable market. What we've tried to create with the CSE, and I'm going to get off my podium now, is a market that works within the Canadian rules to be able to help both domestic and foreign companies have access to capital markets and thereby give greater access to the public to Canada's best ideas, and indeed the world's best ideas. Thank you.
Thanks so much, Brendan. That was a terrific, those were terrific insights. Very interesting. And you've already introduced our next speaker, but before I just mentioned his name and his title, I want to remind members of the audience about sending written questions in advance of the Q&A session that'll be coming up. I've received a couple of emails directly. If you want to use the chat feature, that's you're welcome to do that as well. And so what I'd like to do now is introduce Richard Carleton, who turns out to be a bit of a celebrity in his own right, because not only does Brendan speak highly of him, but I'm looking in the chat box, and Amir Azad says, "Hello, Mr. Carleton. It's my pleasure to virtually meet you. I only attended this event as I knew you were participating." So, you know, what better lead in is that? So Richard Carleton is CEO of the CSE, and he'll speak on the issue of public venture capital in Canada for global entrepreneurs. Over to you, Richard.
Thank you very kindly, Mike, and good morning and good afternoon to the members of the audience, as it may be. And I do want to say how privileged I am to address the group. And thank you, Brendan, for the effortless setup. That was very kind. Thank you again. Yeah, I'm going to take a few minutes to talk about one of the things that Canada really does do the best of anybody in the world. And Canadians are probably accused of being overly modest most of the time, but this is something that, in fact, we can take a tremendous amount of pride in. And that is the development of our early stage public capital markets to finance growth stage companies, not just from Canada, but from around the world. And that's really my key point today, is that this is not a Canada-only story by any stretch of the imagination. With the capability of the ecosystem in Canada that we are part of, that we've helped develop, entrepreneurs from literally anywhere in the world are able to access public capital to advance projects across a wide range of industry sectors. And so if you'll forgive me, I'll take the next few moments to help sort of talk about how it all comes together. And I also have no idea if my screen share is working properly, but we did talk a little bit about, again, the stability. There's that word again. A G7 nation that is obviously very closely integrated with the United States of America, who, love them or not, it's still the largest equity capital market in the world, represents roughly 50% of the capital available for investment in equity markets globally. And sitting on the doorstep, we can literally see into the United States of America from our office in downtown Toronto. The opportunities for entrepreneurs, just not from Canada, but through an integrated North American capital market, are truly immense. So talking a little bit about the local market structure, there are in fact 4 listing exchanges that compete quite aggressively amongst themselves to offer services to early stage and more established companies. And as any well-organized and mature market would offer, we have a full cash and derivatives markets available. Exchange traded funds, Canada was a pioneer in the development of these instruments that assist in individual investors in purchasing a diverse set of assets across various industry classes, as well as investment funds that also cater to both individual and institutional investors. We have 174 full-fledged investment dealers, of which Caldwell Securities is, of course, a leading member. And we also have a very, very large group of advisors who work with companies, whether they are exempt market dealers, the legal profession, accounting profession, as well as investment bankers that are positioned to advise companies from the very earliest stages up to obviously global scale companies, raise the capital that they need to either grow their business, do acquisitions in the market. So Canada is in total home to, at current time, more than 4,000 public companies. And when we look at the growth over the last 3-4 years, it's really all the Canadian Securities Exchange's contribution to that growth. As Brendan mentioned, we are a 17-year-old overnight success story that have genuinely caught fire over the last 5-6 years and are now a meaningful part of the capital formation landscape in Canada. And as you can see, we're catching up on our peers at the Toronto Stock Exchange and at the Venture Exchange well, we're getting there. But this is really, I think, the interesting story for folks that are thinking about raising capital for their businesses, regardless of where they may be in the world. And as I mentioned, this really is a very specific strength of the Canadian capital markets. We're talking about more than $40 billion that have been raised by public companies in the Canadian capital markets each year. And we are clearly on track for a significant record in 2021. It was, of course, one of the surprising impacts of the pandemic, not just in Canada, but in capital markets around the world, that after the market break at the end of March in early March in 2020, capital markets activity of all kinds stepped up, whether it was trading, corporate finance, new companies being listed, mergers and acquisitions activity. We've really had a very, very busy time over the last 15 months in Canada's capital markets. And as I say, we're looking at and trending towards a significant record in terms of new capital raised for business this year. Moving along, market capitalization. Brendan talked about thinking about the total market capitalization exceeding GDP. Canada is over $4 trillion in total market capitalization. As you can see, we're still a very, very negligible percentage of that because our companies are early stage. They're small cap companies, micro cap, nano cap in some cases. And the same thing with the folks on the Venture Exchange. But as you can see, through new companies coming to market, as well as appreciation in the asset values for existing public issuers, Canada has achieved a significant growth in the capitalization of its stock markets over the last 3 years. We talked a little bit about the Canadian Securities Exchange, but we are very focused on the early stage companies. And we are very much focused not just on domestic entrepreneurs, but we do a significant amount of outreach to Europe, to the United States, to Asia, to Latin America, to the Middle East, and for entrepreneurs to access capital. And it's not just in the traditional Canadian industry sectors, such as mining and oil and gas exploration, although those are important contributors to the Canadian Securities Exchange, as you will see in a moment. But we've also been in a position to support new industries, new products that have come to market. Many of you know that Canada was one of the world leaders in the legalization of recreational use of cannabis. I can say that as a finance industry leader without a smile on my face or a smirk or a joke, because it is the fastest growing consumer packaged goods industry in North America. The Canadian Securities Exchange was integral to the growth of that industry because we embraced it early. Not just the Canadian producers who joined the exchange in the spring of 2014, But by 2016, we began to work with companies based in the United States. And we currently have all of the largest US public companies engaged in the cannabis industry from the United States listed on the Canadian Securities Exchange. We also have entrepreneurs from that space, again, from Europe. Israel has been a particularly strong contributor, South Asia, and of course, Latin America. All told, that has helped us grow to almost 700 listings at this point, market cap north of 60 billion. I think what is particularly impressive is in the last 12 months, almost $7 billion has been raised by those companies. And we are looking at financings that are being closed at the rate of 4 or 5 every business day. So incredibly active, vibrant companies that are tapping the public capital markets for growth. I mentioned specific companies in Turkey. Of course, to put a lie to my diversity of our issuer community, the 2 Canadian or CSE listed companies with interest in Turkey. Of course, we have an oil and gas producer, as well as a mining exploration and producing company. We think that there is tremendous opportunity in both of these sectors for Canadian public capital to support efforts of international companies and local Turkish partners. And we'd very much like to work with the industry in Turkey to help them tap into this international pool of expertise and capital that's available through the Canadian Securities Exchange. So this is the, I guess, the ad part. But basically, as the newcomer to the exchange space in Canada, we've had to be more aggressive and better than our competitors in working with entrepreneurs to cut the risk, the time to market, ultimately that factors into the cost of capital. So we have to deliver the lowest cost of capital for entrepreneurs looking for Canadian public capital in order to meet the needs of the marketplace here. Now, the critical questions that will come up just as I start to wind up my remarks is, how do I do an international entrepreneur? So the first thing is, and this is pretty much standard for all of the exchanges in Canada dealing with early stage companies, is the company doesn't have to change its incorporation, its headquarters. It can continue to be headquartered literally anywhere in the world and incorporated under whichever local corporate regulation and statutes are in place. But the company does have to become a reporting issuer in Canada. And you do that in a variety of ways. You can an initial public offering where you engage with a local securities dealer, perform due diligence, you provide a document which is available to potential investors in the transaction, detailing all of the risks, the opportunities, the management background, forecasts, financials, and so on. You can also, if you already have a wide distribution and you don't actually need capital as you list on the exchange, do something called a non-offering prospectus, which is basically the same level of disclosure as the prospectus, but is only qualifying existing securities. It's not intended to support an offering of stock. And then the most common way for smaller companies in particular to get onto an exchange in Canada is through a reverse takeover. And that is where the private company, the existing private company, again, which may be located anywhere in the world, purchases an existing a shell company or an inactive company, which is currently listed on a Canadian exchange. And then they merge the entities, and the successor company becomes effectively the private company. You inherit the shareholders of the existing shell company. Typically, these transactions are also accompanied by private placement financings to provide the private company with the growth capital that they require to execute their business plans. Now, the disclosure difference here is that instead of filing a prospectus with one of the local provincial securities commissions, Instead, you have to file a listing statement, which is reviewed by exchange staff. It contains all of the same information and the same level of disclosure review as the prospectus, the difference being that you're working with exchange staff and not with Securities Commission regulators. There's pros and cons to all of those, and you would be able to obviously review your options with your legal advisors, capital markets advisors, and your accounting team. Now, having worked with many international entrepreneurs who have accessed the Canadian public capital markets, there are a few pointers that will make it an easier experience. One of the issues, of course, is that you have a whole group of your original investors, whether it's the friends and family, local private equity or venture capital firms who purchased your stock way back when you were a private company. And they want to trade it. They want to buy more. They may want to sell some, but they want to be able to access the exchange listing. Now, ideally, the company would have a dual listing in the home market. That is the best approach. But in many cases, that's not available. Then what we need to do is identify, are there brokers in Canada that will open brokerage accounts for residents of the country where the company has done its original levels of private finance? More often than not, that is the case. Those relationships can be, in fact, put in place. There are also many international brokers that provide access for international investors into the Canadian Securities Exchange and the Canadian capital markets generally as well. And again, we may need to work with the company in order to identify who your investors are, what their interests in accessing the CSER, and what their different opportunities are. And there's also a very important part. I talked about the interrelationships between the Canadian and the US capital markets. All Canadian public companies will also be traded in the United States, even whether they know it or not, over the counter. There's a very well organized and regulated system operated by the OTC Markets Group in the United States, where Canadian companies that have chosen not to list on the New York Stock Exchange and NASDAQ will trade in US dollars during regular US market hours with access to all of the full service and discount brokerage firms in the United States in US dollars. So what that means is that if the company is interested in acquiring US shareholders or have US shareholders from when you were in a private company, they are able to trade locally using the regular broker in US dollars without having to take on currency risk by crossing the border into Canada. And the beauty of the system is that the stock is fully fungible. The clearing and settlement arrangements, there are no issues, there's no friction, no additional cost, so that the price in Canada and the United States reflects each other with a small, slightly wider spread in the United States to take account of the currency risk that the market makers are taking on. We also work very closely with the companies that are looking to build international profile, to engage in shareholder communications, to participate in industry events, because of course, one of the key things is listing on an exchange is not the end of the journey, it's only the start. It's a very crowded marketplace. As we saw, there are more than 4,000 public companies in Canada. There's only so much mind share that investors have to give to particular industry sectors. And so part of the role that we take on with our issuers is helping them understand how to get their message out, giving them the platform, working with them to meet the institutional investors, investment funds, and so on that are interested in their space, and otherwise help them navigate the sometimes difficult world of the public capital markets, not just in Canada, but internationally. In any event, it's been a tremendously rewarding experience working with international investors and entrepreneurs in particular, because as Brendan says, we really do have something that's world-class here, and we are able to not only assist in the development of the Canadian economy, but we've been able to provide liquidity and growth capital to investors and entrepreneurs internationally. So here are my contacts, and I would certainly encourage you to follow us on social media if you can. We do a lot of content with our issuer companies, in particular on our YouTube channel. We're actually to the point now where Google pays us literally dozens of dollars a month for the content that we are posting to our YouTube channel. We have more than 3,000 subscribers, but we're very active on social media, and we're always pleased to take your questions, comments, and better understand your business and your needs. Thank you very much.
Thank you so much, Richard. What a success, overnight success story. Great presentation. Thanks again. Before introducing our next speaker, I'd like to acknowledge the presence of two dynamic and outgoing Turkish diplomats in Toronto that many of you know so well. From the Turkish Consulate General in Toronto, it's Consul General Sinamingam and Commercial Consul Mehmet Akizolo, both hard workers out networking all the time, and pleasure to work with them. I'd like to now introduce Barış Azetis. He's Assistant Vice President for Sustainable. Presentation will focus on Canada's asset management outlook for ESG investments. Barış, over to you.
Thanks very much, Mike. Much appreciated. Okay, just making sure that it's loading. There we go. İyi günler. Bu konuşmaya davet ettiğiniz için teşekkür ederim. Benim adım Barış Özyetiş. In the interest of protecting the glorious Turkish language and your ears, I will now switch to my adopted native language for the remainder of the presentation. I was born in Balıkesir, Turkey, and came to Canada at the age of 6 with my mother, my father, and my younger sister. The Canadianized way of pronouncing my name is Barış Özyetiş, and I'm the Assistant Vice President for Sustainable Investing Solutions here at Mackenzie Investments. I'm also joined on this call by my colleague, Edward Brooks, who is the District Vice President, one of the District Vice Presidents on our retail distribution team. In my role, I'm responsible for investment product development, product management, and shelf oversight for our sustainable investing products. Today, what I will do is I'll walk you through why we think sustainable investing is not just a fad, but here to stay, some industry flows, both globally and in Canada. And finally, we will finish with talking about Mackenzie's approach to sustainable investing and how we view the market going forward. So we feel that sustainable investing is here to stay. There is an industry body here in Canada called the RIA, or Responsible Investment Association. Mackenzie has been a member of the RIA for several years. The RIA conducts an investor opinion survey of Canadian investors annually. And this is usually released in Q4 of each year. In the most recent survey, it was determined that 75% of investors wanted their financial services provider to inform them about responsible investments, but only 28% had been asked. In terms of advisor interest, in early 2020, Mackenzie surveyed several hundred advisors to get their thoughts on themes and approaches to sustainable investing. And it was determined that 80% of the advisors selected the environment or climate as their #1 theme of interest. Finally, when we look at the portfolio growth and assets under management, sustainable investing products grew at about a 60% clip year over year from 2019 to 2020. That's from about $12.6 billion in 2019 to about $20 billion in 2020. This is compared with, compared with the average industry growth of about 11 to 12%, which is still fantastic, but not nearly the same level of growth as we see for the sustainable investing products. One thing that we really want to highlight is that individual corporations are pulling in at least as much, in many cases more, than some of the largest countries on our planet. With that, investors are increasingly demanding more focus on environmental issues, specific policies on social issues, and clear guidelines for corporate governance. They want corporations to behave more responsibly, and they are letting this be known by where they invest their money. As many of you know, the acronym ESG stands for environmental, social, and governance. These are non-financial factors that investment managers have traditionally used to generate alpha, but also to mitigate risk. So I'll highlight a few examples within each. What you can see here is clearly with environmental, there's climate change and carbon emissions, but less obvious factors such as the use of natural resources and waste management. Are corporations using these responsibly? For social, a couple of highlights are things like employee safety and community relations. Does the company have a workplace safety program? Are they active in the community via sponsorship and various forms of outreach? And finally, governance. Obvious factors here may be board oversight, but less obvious maybe things like having policies such as golden parachutes for senior executives. One of the things that we certainly want to highlight is what ESG is not. And that is that it doesn't mean that investment managers have to sacrifice portfolio returns, or that they have to ignore traditional financial factors or make major changes to their investment processes. Next, we'll talk a little bit about industry flows. The bar chart on the left of your screen highlights global sustainable fund assets by quarter over the last 3 years. It should come as no surprise that the blue lines represent Europe, who have approximately 10 times the AUM or assets under management in sustainable products when compared to the US. The US is represented by the dark green lines you can see right here. And they are the second largest market, but dwarfed in size by Europe. Europe has consistently been leading the way in the sustainable landscape, both in terms of asset flows and product launches. However, both the US and the rest of the world, represented by the light green lines, which you see right here, we're slowly but surely starting to get going. As we mentioned on slide 2, Canada alone saw a 60% growth in sustainable assets from 2019 to 2020. On the right-hand side of this screen, we identify some notable trends. The first one being that climate-focused funds and core ESG funds continue to dominate flows. In Europe, much of the flows are into actively managed products. So you'll see that 70% of the flows in Europe are active, whereas in the US, 70% of the flows are passive. So that means that they're going into products such as clean tech ETFs or ESG-oriented index vehicles. Finally, the last point there is that impact investing is starting to resonate more with investors, especially products focused on social inequality and continuing with the climate theme of biodiversity. To speak a little bit more about trends in Canada, this particular chart shows the net flows or sales for sustainable products versus other categories through the first 5 months of 2021. The strong momentum from 2019 and 2020 has continued, and new sustainable funds launched in the first quarter of this year have attracted over $1 billion in net flows. That's a phenomenal growth. And if you look at the sustainable products overall, they've attracted just over $8 billion in net flows in Canada. When we compare that, or if we looked at that as an individual category, this would be the second highest in terms of sales in all of Canada, just after global equity products. And for our purposes here, when we say global equity, we're referring to investments in the US, Canada, China, Canada, and basically everywhere around the globe. On this slide, we want to define what sustainable investing means to Mackenzie, our approach. And what we really want to highlight here is that we value progressive corporate behavior. We consider the long-term social and environmental viability of the products and services of the businesses that we invest in provide, and that we aim to build sustainability into Mackenzie's culture, our corporate practices, and every investment decision that we make. We have now 17 investment management boutiques at Mackenzie, each of whom manage money in many different ways. So we have boutiques that focus on asset allocation. We have boutiques that focus on fixed income. we have boutiques, we have several boutiques actually that focus on equities. All of them manage money in very different ways. Some of them are growth managers, some of them are value managers, and some of them use a blend of both. However, a common theme throughout all of our boutiques is that they all utilize ESG in some way, shape, or form. We have been a signatory to the UN PRI since 2014, and we've scored extremely well in our last two ratings by the PRI, with a series of A ratings actually in the most recent year in 2020. Finally, to talk a bit about how we view the landscape here at Mackenzie, we like to follow a simple, sustainable investing approach. So it's really based off of 4 pillars. And you can see if we go from left to right here, we start with responsible investing. That's the left-hand side, whereas the usage of ESG firm-wide to mitigate risk and assist with proxy voting at the firm level. In the middle are the 3 main peers. So these are sustainable core, sustainable thematic, and sustainable impact. The second pillar from the left is what you would probably know it as best-in-class ESG, which is the utilization of positive ESG screens or practices. By core, what we are referring to is the main building blocks of a client's portfolio. The next one is thematic, so sustainable thematic. This targets specific macro trends. Examples here would be environmentally focused funds or ETFs, or climate-focused funds. And then finally, the fourth and final pillar is what we would call sustainable impact. And this targets specific outcomes while still generating maximum financial benefit for our clients. One of the things to highlight there, or examples, would be products that are focused on gender diversity, or possibly a product that is focused on equality. So as you go from left to right, we move from simply mitigating ESG risk to maximizing ESG's impact. And that's where we think that we will be able to really be successful as investors in the coming years. The sustainable investing landscape has greatly improved in Canada and is one of the fastest growing sectors within the Canadian investing landscape. That concludes our portion of the presentation today. I'd like to thank very much, give extra special thanks to Mike and Badar for inviting us to speak with you today. And I wish to thank all of you for your time. Thank you. I'll pass it back to Mike.
Yeah, that's the trouble when you mute yourself. I was in the middle of thanking you and then realized that I was muted. But thanks so much. And it's so relevant that, that you've grown so quickly. I mean, what a tremendous growth surge. And ESG, of course, is so important in Turkey. So you know, technologies, the focus, the government focus, the support programs, huge and growing area in Turkey. So good synergies between Canada and Turkey for that. So thanks again. Well, our next speaker is Nuran Aykan, pronounced the Canadian way, I guess, a CTBC board member and a partner at Gowling WG law firm, and a good friend. Nuran, the floor is yours.
Okay, can I post my presentation?
Yes, please. You can share your screen.
Oh, that's not. Sorry.
Yep, we are seeing now.
It's not the one. Sorry, 1 second. Let me. It's not pulling up. There we go. No, it's not.
Yep.
The message I saw was if you double clicked at a time, then it would be full screen.
If you are using, sorry, if you are using Windows, please F5.
Unfortunately, not being able to load it. So okay, so let me just continue. You don't see anything at the moment, right? Mike, is that correct, or version?
We see a version. Yes, it's good.
But you don't see my presentation, right? It's not. It hasn't.
Yes, I see it. Yes.
Okay.
Yeah.
So, yeah. Okay. Great. So thank you very much, everyone. I appreciate being part of this distinguished panel and the great speakers that we've had so far. I'll go quickly because I'm recognizing the time. So let me just introduce Geldiniz to you. Geldiniz is 1,400 professionals across a number of countries, as you can see in the slide. Our primary focus is on business law and intellectual property matters, and we're in full service law firm in a variety of sectors. Our M&A and corporate finance team, we have just in Canada and the UK alone, over 100 corporate finance and M&A lawyers. So not only do we handle the Canadian side, but we also are quite active in the UK market with AIM and London Stock Exchange listings. But today we're focused on Canada. The one distinguishing feature I think about our firm that others don't have in a concerted way is that we have a Turkish Türk Masası with myself and Mehmet Kömürcü. Mehmet used to be the general counsel of Türk Telecom, and he works with me in Toronto, but we also have partners in our UK and Dubai offices that work extensively with us on Turkish clients inbound to Canada, Canadians outbound to Turkey, and then Turkish companies that go outbound to other international markets, mainly in Africa and other countries. And then we have also a very strong international arbitrations team that helps when those large companies doing business internationally get into trouble. But the focus of today's conversation is about Canadian public listings, how to do it. It's very detailed, but I'm going to give you kind of a high level presentation. And of course, afterwards, we'd be happy to discuss any of your specific questions or needs, and feel free to reach out. So the three principal ways to access capital markets, I think Richard actually alluded to this in his presentation, but obviously the traditional initial public offering is the one way, the reverse takeover, which Richard mentioned as well. And then there's a derivative of that called the capital pool company, which is a TSX venture exchange listed product that is similar to the SPACs. And you've heard over the last number of years, in particular the last 2 years, about the growth of SPACs. Similarly in Canada, CPC transactions have increased dramatically, and the TSX Venture Exchange has increased the size of the capital pool companies and made it a little bit easier to deal with, and in an effort to attract more Canadian CPC transactions rather than having Canadian companies or other companies going into the US market for their SPAC type deals. And then the last one is a direct listing. And this applies when you have a public company that's listed elsewhere that seeks to come into the Canadian market and does a cross listing into Canada. And so for this discussion, I'm gonna kind of not focus on that as much. Sorry. Why consider going public in Canada? As was mentioned by Brendan, it's a stable country, sound financial system. We have liquidity. We have a deep and knowledgeable pool of investors and analysts and advisors. And that's really important, because if you want to have the market know your product, know who you are, know your business plan, you need this group of analysts and advisors to kind of get your story out there. And it's really critically important, particularly for international companies, to spend the time and effort to come to the Canadian marketplace and do their road shows and do the education of what they are, and not just when they go public, but that's a continuing process. And so it's something that gets lost sometimes, but I just raise it as something that you definitely need to keep an eye on and focus. The other kind of legal issue is that there's the Canadian marketplace is a little less onerous from a corporate governance perspective than the US. And as Richard at the CSC mentioned, the CSC is actually probably the most user-friendly of all the exchanges in that regard. And as they're newer and they didn't inherit a lot of the baggage, they were able to come up with things that really matter in terms of the governance perspective. So the 4 exchanges, Richard mentioned in his slide, so I won't focus on that. But I will tell you a little bit about the life cycle of an IPO because it's relevant. Now, this timeline shows that, you know, it could be done in 50 days. That's rarely the case. That's the case when the auditors are on board, the legal counsel's on board, the company has prepared their materials, the preliminary prospectus is been, you know, put in place. Typically, we're talking about 90 days. This first phase here, the preparation phase, that's the phase that takes the longest. And if you have all your audited financial statements that you require, you have your advisors all set up, the legal teams drafted the preliminary perspectives. From the date of filing to the closing, you know, we predict 50 days. Overall, the process is typically 90 to 180 days. So, but this is a good kind of rule of thumb, as they say. So the alternatives to IPO, and the reason I'm kind of skipping the IPO is because the initial public offering system is one where a company really has a very interesting story to tell, and it wants to do it on its own. It doesn't want to have any inherited baggage or wants to come out to the market with a big bang. The other alternatives, which is the RTO or the qualifying transaction in the case of a CPC, is a little bit easier a process in that the company that is coming out, especially from an international market, is able to join up with a already listed company and then go public. And where they have a sufficient interest internationally, this may be very, very attractive, because one of the things that we found, for example, with Turkish companies through our Turk masası, is that the investors in Turkey who might not otherwise invest in a private Turkish company for whatever reason would be happy to look at that company if it were listed on a public exchange in Canada, even though they, that nothing really changes other than it becomes public in Canada. And so when you do a reverse takeover transaction or the CPC transaction, what ends up happening is that the Canadian company becomes the parent of the Turkish company, which continues as the operating subsidiary. So from an operational perspective, nothing really changes on the Turkish side. However, it's held by a Canadian company now. And we've found that investors in Turkey are very happy to invest in a Canadian company where they might not otherwise be, so they might be more reluctant in Turkey. The other thing that is important to note is that in Turkey, there is a capital gains exemption if you hold shares of a company for more than 2 years. So people who may hold shares of a Turkish company may find doing an RTO results in they're having no capital gains tax on the exit from the Turkish private company into the Canadian public company. And so we've done a number of transactions like that where we first done the inversion transaction, and then we can set them up to doing a CPC transaction after that. So in an RTO, as Richard mentioned, you take a public shell company and it acquires a private company, goes public. There's a number of ways to structure an RTO. You can do it by way of merger, you can do it by way of share exchange, you can do it by way of the transaction I mentioned, where you first do the inversion transaction and then you go public in Canada, either through an IPO or through an RTO. So there is a lot of flexibility in structuring these transactions, and much of it depends on tax. advice, as well as on the legal corporate structure that the Turkish company may have already existing in place, and whether it has other international subsidiaries that may play a factor in determining what's the right approach. In terms of the IPO alternatives, we talk about the RTO because it provides flexibility in financing that is, I think, unique. The pricing of an RTO and an IPO are roughly equivalent. So really what we're looking at is kind of speed to market and the fact that RTO transactions are not reviewed by the securities commissions, but by the exchanges themselves. And so that ends up being a little bit of a speedier process to come to market. It also arranges, you can arrange financing at various points in that process. You can arrange financing up front for the private company from the publicly listed company can make a loan into the private company to sustain it for a period of time. There is also RTO financing that it can occur. There's also financing that can occur during the process through what we call subscription receipts. So there's a number of reasons why an RTO transaction is a little bit more flexible than going through an IPO. Again, the public company, one of the issues in an RTO transaction is you have to make sure that the public company is clean. That's the benefit of a CPC, is that it's clean because it was only set up for the purposes of doing an RTO. But that doesn't mean other listed companies that are shells because they've divested their existing business are not clean. So, but that's part of the due diligence process that has to be undertaken to determine whether they're clean or not, and what risks there may be. So, the legal advisors will be able to do that review and come up with a view on how clean a company is, or how to isolate risks in that regard. The CPC process, as I mentioned, is quite unique. As I said, it's part of the SPAC, similar to a SPAC. You incorporate the CPC, you go public, you take the CPC public, now it becomes a reporting issuer in Canada, and then it looks around for a qualifying transaction, which is the private company. And that private company could be a Turkish company, it could be another international company. Many Turkish companies have already structured whereby they're held by a Netherlands holding company, etc. All of that is accomplishable. We can work with those structures to ensure that we can complete a qualifying transaction in that regard. So some of the characteristics of a CPC I just wanted to focus on is that previously the founders had to invest a minimum of 100,000, and usually they could do that at half of the IPO price. So setting up a CPC is actually a business in itself. And so many people set up these CPC corporations for the purposes of looking for a qualifying transaction. And when they do so, they can put in their own capital at let's say 5 cents a share, and then they do an IPO at 10 cents a share. They can raise up to $10 million, which then becomes available to do the RTO transaction. The $10 million size is what's allowed, but typically we see CPC transactions, coming out of the gate with $2-3 million, which is still, quite good for many international companies early stage companies seeking to come to Canadian market. So, that's something that I point out to you, because from a Turkish perspective, this might be the right venue for you. I'm listing here the advantage of a CPC over an RTO. Really, it's the shareholder approval process is not required usually in a qualifying transaction unless the parties are not at arm's length. It's a new and a clean shell. The time and cost of completing a qualifying transaction may be less than an RTO, but not always. There's obviously lots of factors that go into that. And then the filing statement for a qualifying transaction is again vetted by the exchange and not by the securities regulators. I know that's the case also for the CSE with respect to their RTO transaction. So I just want to make sure that we understand that sometimes these differences are not as great when we're dealing with the CPC or we're dealing with the CSE, because the CSE streamlined a lot of these processes, which make them quite an efficient market. I know I went very, very fast, and I could spend a lot more time, but I just wanted to give you a highlight. My details are below, and I look forward to answering any questions or comments you may have in the future. Thank you very much for your time and attention.
Thank you very much, Nuran. You know, all the presentations have been very positive and encouraging. So I'm assuming that our next speaker, Brent Osborne, partner at Deloitte, when you're going to speak about taxation planning, will have some good news for us as well. Is that right, Brent? Hello, Brent.
Sorry, can you hear me? Hi, you can hear me now, right?
Yes, can hear you now.
Yeah, I was actually just thinking about a lot of what Nurhan had to say and said, okay, like he was saying, we can make this happen. You know, we can get the transaction done. Everyone's been speaking so positively, and we were joking around as we prepared for this event, the speakers, about how if we do the ordering just right, we can talk about all the different ways we can help create value, you know, for our Turkish investors in Canada, and then we'll have Brent come in and talk about the different ways that we can take it away. And that is not the way that we're going to be doing this today. It is I think a positive discussion, and again, being mindful of the time here. I had prepared a whole bunch of slides and remarks, but I'll keep it very quickly. Keep very high level so we can be quick, and then get to the Q&A, Mike, if that's what you'd like. I think you know, first of all, with Nurhan talking about how do you set up in Canada, like the different ways that you can list in the capital markets, I will say that whether it's through sort of like an IPO or through an RTO or some of the other mechanisms that were discussed, we can definitely structure those in a tax advantageous way in Canada. Often we can be very efficient on those transactions. And what's interesting and unique about Canada and the way our tax system is set up is that oftentimes the buyer and seller will have to work together to come to the best tax outcome, right, for both buyer and seller. And perhaps that's similar in Turkey as well. But I find it's interesting to say, okay, well, if the buyer comes in and wants to do A, B, C, and D, and the vendor really cares about, you know, the X, Y, and Z, that we can often structure transactions in unique ways that will satisfy the tax objectives of both sides. What we're looking at here, though, is just from a general investing standpoint, you know, when you invest from Turkey into Canada, what are the key tax considerations that you should keep in mind? A quick piece about Canadian-Turkish relations. Probably most people on the call here would be able to speak to this better than I. The key point that I wanted to highlight is that Canada and Turkey have a fully fledged tax treaty in place. It's been in place now for about 12 years and been fully operational. What that means is that we can generally get more efficient tax answers, you know, from an investing perspective from Turkey into Canada, and tax certainty around the Canadian taxation of business operations that are run by foreign enterprises than we would if the treaty was not in place. Canada has a comprehensive treaty network with over 100 countries in the world, which is quite impressive. Makes it a great jurisdiction to do business in, but also a great holding jurisdiction for investment. A quick note about our tax system. So similar to those of you who may be in Europe, we have a very similar system as the UK system here, which effectively, you know, is a system that is governed by the Income Tax Act and its regulations, but is also supplemented by common law in the UK tradition, meaning that a lot of our tax, although it will be legislated, will have this common law interpretation around it, which can often frustrate people at times who may be used to a more codified structure. It means there's a lot of gray area oftentimes in income tax in Canada, and we often find ourselves, you know, trying to research, you know, precedents to make sure that we're doing something efficiently and that we're doing it the right way. It's generally, you know, the nice thing about Canada compared to other countries like the United States is that we have a fairly harmonized tax system, both income tax and sales tax here in Canada. Most of our income tax and sales taxes are administered by the federal government, which means you're generally dealing with one unified authority in Canada. versus the US, where you're probably dealing with 50 different states and all sorts of different elements there. So I find that our foreign companies coming in to do, or foreign investors coming in to do business in Canada find that refreshing. The exceptions being Revenue Quebec in Quebec and Alberta Finance and Alberta administer their own corporate tax systems. And one key note here, which I think Nurhan kind of referenced as well in this presentation, Deloitte is a global firm. We have an office in Turkey, and I do deal with our my Turkish counterpart quite often when it comes to structuring investments into Canada and often Canadian investments into Turkey. The key principle here from a Canadian perspective is that residents of Canada are subject to tax on their worldwide income, but non-residents of Canada, including those who would be residents of Turkey, would only be subject to tax in Canada on their income from Canadian sources. That's sort of a general rule that sort of guides our system. And those Canadian sourced income items might be income from employment, income from a business, or income from the sale of taxable Canadian property. I just kind of went through that slide. So if you're thinking about this from a Turkish investment perspective, and you're looking at Canadian assets or Canadian companies, generally speaking, if you're an investor and you're kind of a passive investor or even an active investor, but you're carrying on your investing activities offshore, the Canadian enterprise will often be taxed on its Canadian earnings. The non-resident shareholder will likely not be taxed in Canada on the purchase and sale of shares, unless those shares are considered taxable Canadian property, and that generally means that the shares derive their value from real estate in Canada, or real property situated in Canada. Anytime that somebody's involved in sort of logging business, timber business, energy and resources business, I think it's very good to check this in addition to the traditional real estate investment, just because our rules do extend to include many companies that deal in those spaces. But very generally, this is a very I think very positive facet of our system, because it allows for non-resident investment to come into Canada and only be taxed on certain certain types of property here, which I think is very, very helpful. It is funny too, because people often ask me, well, hey, you're patriotic Canadian, right? You're very into the country, and you're born and raised here. How is it that you feel comfortable being an inbound tax advisor and helping non-residents come here and pay no tax? And I would suggest that the answer to that question often is, from my perspective, how you structure into Canada is so key, because very often what we'll find is that Canadian tax can make or break an investment proposition, right? Your rate of return after tax in Canada, generally speaking, from a Canadian corporate tax perspective, you're looking at a 27% income tax rate on business income in Canada. But with the right structuring, including the introduction of debt, offshore debt, and other things that we can do, we can often get that tax profile to be much more efficient. And then oftentimes we help structure things that would not have occurred in Canada had we not done the right structuring and gotten the tax rate down to a lower effective rate. A note on withholding tax. So if you are investing into Canadian companies, whether they be public or private, generally speaking, you're going to be subject to a 25% withholding tax rate on payments of dividends, interest, and royalties, among other types of payments, unless there is a tax treaty in place. Also, if you're a non-resident and you perform services in Canada and you receive payment for those services, you're subject to a 15% withholding tax rate, although that 15% is just an installment on what your final tax liability is, should you have one in Canada. So I mentioned the Canada-Turkey treaty. Generally speaking, the treaty will apply or should apply, assuming that the Turkish resident qualifies for treaty benefits, to reduce the withholding taxes on those flows I just mentioned, from 25% down to 15% for royalties, 15% for interest, 10% for royalties, and 5% for dividends if you own at least 10% of the voting power of the company paying the dividends. We often also will see the interposition of other holding companies between Turkey and Canada when people are investing into Canada. That type of planning is getting more difficult now because the OECD countries who are participating in the base erosion and profit shifting initiative recently signed what's called the multilateral instrument. So we're seeing a lot more pressure when intermediary holding companies are being used between Turkey and Canada. So if you're thinking about that, we should probably talk. It may not be as effective as you think. Finally, I wanted to leave like a little bit of a helpful table here for you, because many investors into Canada are often faced with this question, especially if they're looking at private investment, although this can apply, I think, from a public perspective as well. Generally speaking, a non-resident of Canada has to decide if it is going to do business in Canada. A, will its activities give rise to tax requirements under our domestic legislation, right? If so, B, will the treaty apply to be able to reduce the tax required in Canada, that be filings as well as actual tax payable? Once you get to the point where you know that you'll be taxable in Canada, whether it's because you'll have physical operations here or for another reason, you're generally faced with the choice of, do I operate in Canada through a branch or through a subsidiary in the country? And this choice is often one that people sort of quickly flock to the subsidiary corporation piece, and oftentimes it's for good business reason. But when you take a step back, there are often pros associated with operating a branch office prior to jumping into full subsidiary mode here in Canada, and so we often get people to consider that. One of the most overlooked considerations is when people are jumping into the investment in Canada, they're often thinking that they're going to make a lot of money and make it very quickly. When you review your forecasts and realize that perhaps the first couple of years might result in losses in Canada, those losses, if you use a subsidiary, generally are going to be trapped in Canada until you earn income in Canada, or very often in other countries, if you just use a branch, the losses in Canada on startup can actually be used to shelter income in the other country. So good things to think about there. So generally speaking, that is my extremely fast mic 11:24 a.m. overview of Canadian tax considerations for investment into Canada. I think for this group, the key factors are: A, make sure when you're structuring in that you're talking to a tax advisor to help make sure that structuring is as efficient as possible. And B, as you operate, considering the different flows that are coming out of the country, the different leverage models that we can use to help drive down Canadian taxation, in this case vis-a-vis the Turkish rules, is very important. It's very important that you have tax advice on both sides of the border to make sure that you're getting the most efficient. Thanks, Mike. That's all I have.
Thank you so much, Brandon, and thank you again to all preceding speakers for the valuable insights you've provided today. I think I'll now move quickly into the Q&A session. And Brendan, this came in while you were talking, so this must be for you. It relates to the capital market versus GDP issue, that evaluation, capital market valuation versus GDP. And the question was, what is the Canadian capital market valuation versus the Canadian GDP?
Off the top of my head, I don't know. Richard might have a quicker number than that, but you saw that the market cap Canadian is about $4 trillion, and our market cap isn't that. So I don't know what the number is, but it's not that big. So I would say order of magnitude 1 or 2 trillion would be my best guess.
Okay, thank you very much. Another question, I'm not sure this is because Decide Canada enjoys access to public capital through 3 stock exchanges. How do these 3 stock exchanges help small to medium-sized businesses access capital in Canada?
I think that sounds like me, Mike, if I can be so bold.
Okay.
I think all of the speakers have really run through the process, but ultimately it comes down to cost of capital. And if you look at all of the factors associated with different funding mechanisms, whether it's private equity, venture capital, friends and family, other techniques that people use to secure growth capital for early stage or in fact outright startup companies, people looking at the Canadian capital markets determine that in fact it's very attractive in many industries to go public because of the valuations that you get and the cost of capital that you can obtain. So really it's ultimately up to the business owner, the entrepreneurs, to determine what is the most cost-effective means of acquiring that growth capital. And in many cases, not in all, but in many cases, the answer is the public markets in Canada for early stage companies. And I'd say particularly in the fields of mining and oil and gas exploration, life sciences, technology. I mentioned the cannabis space that, again, for a variety of reasons, had to go to the public markets to obtain growth capital, and a number of other industries that we cover. So, as I say, there are many options available to business owners, but ultimately it should come down to your cost of capital, and Canada's public capital markets are very competitive with our peers from private equity sources.
Thanks very much. I'm guessing this next question might be for Barris. I could be wrong. With stakeholders around the world encouraging a focus on environmental, social, and governance improvement, how is the Canadian capital markets ecosystem supporting the dialogue by directing capital to sustainable businesses?
Thanks, Mike. Yes, that's a great question. I would say there's a lot more disclosure going on with Canadian corporations for sure. There's a lot more pressure from investment managers now to be more actively disclosing. So there's definitely from that end. In terms of the other part of the question, I think it was around. Could you just repeat the last part with the?
Sure. How is the Canadian capital markets ecosystem supporting the dialogue by directing capital to sustainable businesses? Yeah.
Okay. So how supporting that dialogue would be the primary way would be engagement with companies. The secondary way would be proxy voting. So all investment managers, many of the investment managers in Canada are now very active in that space in terms of engagement, in terms of proxy voting. What we can say for Mackenzie specifically is that all of our portfolio managers are required to vote on all shareholder resolutions. So that's one way that we engage. We have a consistent proxy voting process. We utilize Glass Lewis for that. We utilize Hermes to assist us with our engagement issues as well. So for those of you who are unfamiliar with Hermes, what is really great about utilizing a world-renowned firm like that for assistance and engagement is you get collaboration. So it's not just, so even though Mackenzie might have significant assets in specific companies, that combines the Mackenzies with the Fidelities, with the TDs, RBCs, other Canadian businesses and asset managers, and you go to the table as one, as opposed to having separate and disparate views. So that's how I would answer that particular question.
And that's how you did answer it. Thank you very much.
Thank you.
This one I think is more open. So just to dive in, whoever wants to, we can have multiple answers. As Canadian and global economies recover from the COVID-related slowdown, how can we build further synergies for Canadian and Turkish capital market stakeholders to support that recovery through the pooling of capital? Open question.
Mike, maybe I can take that.
Okay. Thanks, Badar. I'm going to be introducing Badar in a minute, so thanks, Badar.
So I'm going to put on my hat actually as a former chair for Brampton Board of Trade, our regional chamber in the third largest city in GTA. Economic recovery obviously is near and dear to our hearts, being business community members, as it be for our chamber network colleagues in Turkey. And capital plays an important role in that process, and especially mergers and acquisitions. Mike, Canada has a very interesting situation in our hands. While we do a fantastic job with immigration and have one of the more liberal immigration policies in the world, we do have aging demographics. And on the capital market side, we have known this for the last 2 decades, if not longer, that eventually we're going to get into a situation where in order to grow, we either continue to increase our immigration, or we give our businesses an opportunity to work in tandem in partnership with companies abroad. So I think what we're working on today actually facilitates that activity and adds more dynamism to that by pooling capital together, introducing Turkish business owners to Canadian business owners in a strategic manner, helping them grow here in North America through the CUSMA agreement with the United States and vice versa, giving our guys an opportunity to grow in Turkey and through Turkey into Europe, the largest trading partner in case of Turkey. So that's a very broad-based answer, but I hope it addresses the asking person's inquisitive background.
That's perfect. Thank you very much, Badar. I'm just going to throw out one other question. Turkey is a growing emerging market with young demographics. You just sort of referred to that. Why is investment diversification in a developed market like Canada good from risk management? Why is investment diversification in a developed market like Canada good from a risk management perspective? So anyone care to tackle that question?
Well, here's the interesting thing, if I may, is that although Canada is technically a developed market, we have the growth characteristics and a very high correlation with developing markets. So in a kind of way, you get the best of both worlds. Because the economy is so resource driven, that has a lot in common with emerging markets. But you also have the stability of everything we talked about. So Canada's kind of the best of both worlds because we're high correlation to emerging markets. So if you like the growth, you like the ability to participate when the world is on a rebound or when commodity prices are expected to rebound doing very well, Canada is the place to be. Plus you have the stability that we talked about at length at the beginning.
Great.
Our GDP is just over 1.5 trillion compared to the Americans that are just over 20 trillion. So we're about 1/8 of the American GDP. We
try harder. Thank you very much, Brandon. That's a great answer. Great answers, in fact. Thank you very much. I think I'll close off the Q&A session there because now I'd like to give the wrap up and the final word to Badar, who just spoke earlier. He's Badar, to those who don't, anyone on the call who might not know him. I don't think there is anyone on the call that doesn't know him, but Badar is responsible for us holding this event in the first place. And in fact, for the previous event, the Turkish Capital Markets event. So Badar, over to you for the wrap up and the final word, please.
Thanks, Mike. First of all, I'm gonna give a shout out to another gentleman on this call that most people on this call probably wouldn't know, and that's my corporate finance professor from Brock University, Dr. Don Sear. He's not only the dean of Brock University's business program, Goodman School of Business, but he also sits on the board of Niagara Industrial Association. And I'm gonna start my comments by telling you guys a joke that he told us while we were still in school many, many years ago. I'm not gonna tell you how many years ago. I'm not sure what was going on that day, but he walks into our class and he goes, well, let me tell you guys what's the difference between us people in finance and those guys in the accounting department. We create things and then there's an accountant behind us jotting everything down. Heather Strady and Brent from Deloitte, this is not a shot at you guys, but I wanted to recognize Dr. Don Sear for saying that to us many moons ago, and it really does apply to what we're doing here. We're really laying down the foundations of supporting further engagement and growth between Canada and Turkey. As I said to you, as a past chair for Brampton Board of Trade, I've spent a lot of time traveling in Turkey, visiting chambers, having a dialogue from the standpoint of how we can support manufacturers and exporters into each other's jurisdictions, grow the bilateral trade, but at the same time, foster better economic cooperation through investments. I firmly believe that what you guys have started over the last couple of months in terms of this dialogue around the capital markets would only propel that activity in the months ahead. So I wanted to thank Mike Ward, our Executive Director from Canada-Turkey Business Council, and by the way, the first Canadian Consul General in Istanbul. He literally opened the shop for us in Istanbul, for continuing to lead the charge, continuing to rally the troops and providing us the moral as well as personal support. He spends a lot of time. This is just, capital markets is just one aspect of what Canada-Turkey Business Council is engaged in. We're literally involved in supporting dialogue across all sectors, whether it's ICT, whether it's agroeconomy, whether it's manufacturing, as I mentioned to you, chamber-to-chamber dialogue. And if it wasn't for Mike's leadership all along, I don't think we would be having this conversation today. So I want to thank everybody who took the time out, contributed towards this dialogue. And I am certainly looking forward to working closely with Alif Hanım and others in Canadian Turkish Capital Markets Association Yilmaz, so I thank you for your comments earlier on. Perhaps we can take a look at, us people in capital markets, we're used to looking at data points on a monthly basis, on a quarterly basis. So if Brandon and if Richard from CSX are on board, maybe work with TCMA to create a quarterly process where we can have this dialogue on an ongoing basis. We can talk a little bit about what we're seeing in our markets. You guys can tell us what you're seeing in your markets, broken down by different sectors. And at the same time, introduce some companies to our capital markets. And we can introduce some companies to your markets if they're interested in growing in Turkey and taking a look at things through the capital markets there. That's 2 cents on the subject, Mike.
Thank you, Badar. Thank you, everyone, for the speakers, the people who registered for this webinar. You'll hear from us again. We'll do this again. And
may I speak?
Yes.
If possible.
Yes.
Okay, this is such a small contribution rather than questions. I'm speaking on behalf of General Directorate of Agricultural Research and Policies, we are TAGEM. As a research and development unit, we have benefited greatly from the information provided in this webinar. Thank you again. As TAGEM, although we cannot talk about the financial investment at this moment, this meeting let emerge in our mind the idea of having opportunity to cooperate with our Canadian colleagues. We would like to take this opportunity to establish agricultural RD partnership. So we already have a recent cooperation negotiation with the Canadian Ministry of Agriculture on pulses, legumes. So we would like to produce joint projects and cooperate with Canadian partners, if possible, of course. Thank you very much for this webinar.
Thank you very much, Hasan Hanım. And the Turkey-Canada Business Council is headed by Nurdan Hanım, and we're very much focusing on the agriculture sector. So thank you for raising that.
Thank you.
So unless anybody wants to say anything else, thank you very much to you all.
Thank you, Mike and Richard.
Okay.
Thank you, everyone.
Thank you so much.
Thank you, everyone. Great presentations.
Stay healthy, everybody.
Thank you, and bye-bye.
Thank you.
Thank you very much. Bye-bye.
Yeah, thank you, Mike. Take care.
All the best.